Welcome. This is Proforma Stabilized Spreadsheet. Seek Actual Operating Data, video tutorial number 2. My name is Jeffrey Smith. In this example, I have filled out the cost and structure of financing as 80% loan-to-value first, 4.75% annual interest rate, amortization term 300 months, that's 25 years, due in 84 months, with a 1% incentive fee rolled in. Second position, preferred equity, 16% investment to value, annual interest rate 7.75%, 300 months for amortization, 84 months due, 3% incentive fee rolled in. In this example, the pro forma operating data has been set to the actual operating data of the property, and the asking price for the property is $2,625,000. And you can see from the pro forma stabilized analysis, we've determined that the cap rate is 8.0342%. The debt coverage ratio is a dangerously low 1.1439%. If you are syndicating this deal, the membership cash flow per unit yield is 6.4316%. That's even lower than the capitalization rate. Therefore, we have a negative leverage on this deal. What we can do is go back to pro forma operating data and do some what-if analysis. Let's look at what if the cap rate was 10%. Dividing the actual net operating income of $210,897 by 10%, net operating income divided by 10% yields a valuation of $2,108,970. Now if we do a seek actual, we can see that the values have been adjusted such that the cap rate is now 10%. Maximum allowable offer, $2,108,970. We've adjusted the gross return on equity. This is also called the cash-on-cash return for the 4% common equity investment, with an annual cash flow before tax of $62,774. Now we can see that the membership cash flow per unit yield is now 18.9%. That's a very good yield on the common equity investment. Also, I want you to see the repair estimates worksheet. This is for cosmetic repairs. You can specify in the yellow entry cells the number of units and the cost per unit, and the spreadsheet will calculate the estimated cost and perform all the subtotaling and the totals. Now on the pro forma operating data, there is a cell called credit from seller to buyer, and that is initialized with a reference to the total repair estimates cell on the repair estimates sheet. These values are copied into the mail merge templates so that the listing broker and the seller can see that even though you've calculated an offer price, you expect to get money back at closing to cover any repairs that you've estimated, and therefore there is an effective purchase price that would be less. This has been Proforma Stabilized Spreadsheet Seek Actual Operating Data video tutorial number 2. My name is Jeffrey Smith, and thank you for your support.